Good morning. It is Monday, November 4th. Welcome to what most would call, in a fraternity, you have what's called Hell Week. That is this week. Nothing to see here. You got an FOMC meeting on Wednesday, announcement on Thursday, and that was only put off because we have the election on Tuesday. So welcome to Hell Week. Yeah, I'm in danger. You could see some crazy volatility. And I'm just starting off the podcast with that one. You could see some crazy volatility this week. And the Qs were up 0.14 in pre-market. You're at 488 on the Qs. The all-time highs around 503. We've seen it pump up to there last week and it pulled back. We're probably going back to that because here's the thing. Look at this. We're in November, okay? 26 years I went back in Trendspider. 26 years. 77% of those 26 years, the NASDAQ QQQ was positive with a mean change of 2.59%. In a month, if you can get 2.59%, times that by 12. That's 24% in a year. Okay, so if you can invest in that month, whether people know it or not, whether the election takes us down, whether there is uncertainty in this market, okay, that is the fact. That is not an opinion. That is a fact. 26 years, 77% of the time, the NASDAQ is up. I'll take that bet. That's better than blackjack. And when they tell you that the economy is bad, let's just look at this. Stocks, all-time highs. Home prices, all-time highs. Bitcoin, all-time high. Gold, all-time high. Wages, all-time high. U.S. household net worth, all-time high. Bond cash yields at 5%. Unemployment rate at 4.1, historically low. Inflation at 2.5. Do not tell me this economy is shitty. When you go into that voting booth, realize we are at the wealthy have gotten wealthy. So the Democrat thing, they may not like that the wealth gap has increased. But the fact is the economy is healthy. Money makes money. So you want to be with those people. Don't be pulled out of the market. Don't just because Warren Buffett is pulling out his money does not mean that you should pull your money out of the market. Time in the market beats timing the market. And yes, we have a crazy week ahead. And yes, there could be volatility. But the reality of the fact is most of your money should be working for you in money. You can't time the market. So while the Qs are up slightly, they could go down. We could have some type of, election interference. We could have some craziness in the election like we did last time in 2020. But the reality is the month of November is typically strong. I don't care who it is in the White House. 2021 was up, 35%? And 2017 was up about the same. So get ready for the next year. Don't look at the short term. Look at the long term. And that's what I'm trying to point people to, is looking at the long term. Now, here's the Qs. We can go and look at SPY because SPY is just the S&P 500. I like to buy VOO. It's got a bigger one. Both of these in the 4-hour algorithm have you out. Okay, they have you out. And if you want to trade on the 4-hour algorithm, that's perfectly fine because the 4-hour algorithm on SPY makes you 44.2%. The actual asset over the last year makes you 49.8%. So I wouldn't argue if you trade 40% of your SPY position in a tax-advantaged position, in a tax-advantaged account on the 4-hour algorithm. You can't, that's set 6% over 2 years. Compounded, it's going to hurt you over a long term. But if you're super uncertain about the election, if you're super uncertain about the Fed meeting, if you're super uncertain about the economy, then I wouldn't argue that that's not, sleep at night, but leave 50% in, but leave 50% out. And you can trade it on this 4-hour algorithm. Now, here's the other thing, okay? This is the month of Black Friday. And so if you've been hearing me talk about this 4-hour algorithm, Trendspider's Black Friday sale is now active. Now, I'm going to go over this, but realize there's a lot to this because these savings are phenomenal. phenomenal. Remember I said for about $50 a month, you can get standard, which gives you my 4-hour algorithm. It gives you 5 active windows, 30 simultaneous alerts, gives you some stuff. Oh, and then you can upgrade to enhanced for a little bit more. It was like $65 a month. And then advanced was something like $80, $90 a month. It was significantly more. Well, look at these prices, okay? Now understand, this is time sensitive because next week it goes up. This is going on for the entire month of November. But Black Friday deal is here. Now, I want to explain this because the standard, great price. If you're just wanting a chart software, you just want my 4-hour algorithm, you don't want to do anything else, that's a great price. $545 if you're trading with a large enough portfolio. In my mind, I think you're going to actually benefit from the 4-hour algorithm just in a few stocks, managing your portfolio. I think that makes sense, okay? That is super cheap. That is a 15% discount. Not bad. Not bad, because I know what their costs are, and they're not making a lot of money off of you on that one. Now, enhanced, this is a little bit more advanced because this one comes with 10 active windows, 100 simultaneous alerts, 30 active trading bots, and you can go and you can look at this. It comes also with a free one-on-one training session, okay, for $49 a month. That's $591 for the first year, okay? I would point anybody new to this advanced tier because this is the best discount that you're going to get. 75% off. And here's what it comes with. I don't care about the 20 active windows. Yeah, that's great. And that's fantastic. I'd use those. 400 simultaneous alerts. You can set up alerts for your entire portfolio for buy or sell. That's fantastic. You can set up bots for your entire portfolio. 100 simultaneous. If you've got 50 freaking positions and set up buy and sell, there's your Alpha Picks buy and sell trading bots. It's fantastic. But here's the key to this advanced tier. Okay? It's down here. It's unlimited one-on-one training time. So if you're new to this, if you're new to technical trading, not only do you get my 4-hour algorithm, not only do you get the 65-minute algorithm, not only do you get all my custom watch lists and all of the scanners that I personally use that you listen to every day, but you could literally make a training on every day with a product expert at Trendspider. And they will guide you through setting up strategies. They will guide you through all of the indicators. They will guide you through all of those things. Unlimited one-on-one training. And when I talked to Dan Ushman, the CEO of Trendspider, and I said, hey, should I really push that? Because that seems kind of crazy for you guys to do. His response, we love training people. That was his response. Push it. Push it. Because if they're new, we love training people on this tool. And that was the key. So if you are going to take advantage of this, I would urge you, do it this week. Now, here's the other thing. Okay? You can get a free 7-day trial. It's not these prices. It's a little bit different. And I don't exactly know how you do it, but there's a free 7-day trial offer. Now, here's the difference. If you go with the 7-day trial, you do pay a little bit more. Okay? You don't get the discount. The other thing that happens is I'm not going to give you my algorithm, watch list, and things like that until you become a paying customer. The reason, simple. Come on. You want to get a free 7-day trial with my algorithm? That's like Alpha Picks saying, hey, we're going to give you a free 7-day trial of the portfolio. No, it doesn't happen. So basically what I would tell you is if you are uncertain about this tool and you don't know if you actually like it, go and get the free 7-day trial. Okay? Use the tool for 7 days. If you don't like it, then you don't have anything. Use my link at Linktree first to sign up. Okay? You use this link. It's going to get you the best offer possible. That's the key. Okay? It's going to get you the best offer possible. Just make sure if you sign up through a chat agent, they have chat down here in the bottom right. If you sign up through a chat agent, just mention Gary at Daily Stock Picks is the one that referred me, and they'll make sure you're on my program. But make sure that if you want the 7-day trial, you email me once you become a paying customer. Do not email me on the first day. And I'm sorry to everybody who took advantage of this offer yesterday and actually emailed me. I was getting ready to come on the air today. I didn't know this was this. They just announced this to me on Saturday that they were doing 7-day trials. So it's not like I get a ton of headwind about this stuff. But this is the best sale of the year. You will never get this price again. That is amazing. And here's the kicker. The kicker is these guys not only launched this Black Friday tool. In the middle of your screen, you're going to see this thing called AI trading models, okay? This is game changing. So I have not played with this. Full disclosure, I was on a demo call of it Thursday, and I know it's coming out as a beta, so they don't have a lot of documentation on it, but several people in our private Facebook group have used it, and they said it's super easy to use. So if you have Trendspider, I would urge you to go and try it. Dan has told all of the affiliates like me, have your people go and try and break it. It is beta, so it is a soft launch. So understand there might be problems. But here's the theory around this. So say we head into a bear market, okay? And I want to know how to trade in that bear market. I can train the AI on the 2022 bear market. Remember when the Fed started raising interest rates and the market went down in 2022? And we can go and look at that on a weekly chart here. I can go tell the AI in Trendspider, hey, look at this stock during this period. And I can say, look at SPY. I can say, look at NVDA. I can say, look at Palantir during any period that you want. Train it. The AI will go out and it will not only test your strategy, like my 4-hour algorithm, but it will test other strategies based on Trendspider's indicators. And it will go and get the best indicator possible to try and trade that stock. And it gives you responses about performance. And it gives you responses about buy and hold. It gives you the ability to customize everything. That's my understanding of this. Now, the actual implementation, I have not played with it. But the fact that if you're scared of getting into the markets at an all-time high, this AI tool could actually be the game changer that you're looking for. It is the first one in charting. They are the first ones to release something like this. And the reason Dan said that they released it, he's pissed off that people are saying that they're using AI. And they're not. They're not. I can tell you that my algorithm is AI, and that he used that as a specific example. He said algorithmic trading is not AI. It's not. What you're doing is you're training a large language model on the history of the market with your strategy. So it's actually using AI on the back end. He said it's extremely expensive. More than likely, they're going to have a tier with the AI model. And that's why you should get the higher level tier because, again, it's expensive. They want it out to everybody. They want to trade it. This is why I love Trendspider, is they don't hide their initial stuff behind a paywall and they don't pump it up. Dan's like, hey, you may break this stuff. It may not work exactly the way you want it. So make sure that you're getting the results that you want. But that's why I love Trendspider. So as far as the markets go, again, biggest sale. Over 4 weeks, the price goes up. You can see it right here. Okay, there is a 7-day trial. I don't exactly know, but if you message them or look at this, there is a free 7-day trial offer. I think it's a free 7-day trial. Yeah. I have the prices. Hold on. Let me see if I can pull up the prices real quick. Let me see. Free 7-day trial. Let me see if I have... bear with me. No, I don't have it. Okay. Oh, there we go. Discount tiers and pricing. There we go. Okay. The free 7-day trial for the standard, it looks like the annual standard is $597. So instead of $540, it's $597. The free 7-day trial for the enhanced is $898. So it goes up significantly, $898. Now, the annual advanced tier for the free 7-day trial, it goes up to $1,341. So you're saving significantly by not using, and that's why I said you guys see me use this all the time. So there's my sales pitch. We won't go into more of a sales pitch on this at all, but I wanted to bring that up just so everybody knows, because it is a fantastic, fantastic deal. Now, we got news on Friday. I told you Intel was a shit show. Well, it's a complete shit show now. It's getting bounced out of the Dow. NVIDIA is replacing Intel in the Dow. Now, NVIDIA pre-market, I think it's up like 2%. Get it below 140. Just get it below 140. It's at 137. I do think, here, the algorithm got you out. The algorithm got you out with a nice 18% gain. I wouldn't wait for those Bollinger Bands to bounce back up, and then all of a sudden you're at November 20th when they release earnings. Look at the MACD. It's down at the oscillator. Look at the RSI. It's back at 45. On the weekly, you are absolutely stretched, but look at how that MACD has reset. It's absolutely stretched. Your RSI is at 61. The last time the RSI was at 61, you were trading at $48. $48 when the RSI was down this low on the weekly. Okay? Do not wait for this. The valuation isn't crazy. But yeah, into NVIDIA, into the Dow. And you know what else? Sherwin-Williams gets added to the Dow. Big deal. Took Dow out. So you've got NVIDIA replacing Intel. Remember, the Dow is only 30 stocks. It's 30 stocks. So what do we have on the week ahead? We've got Palantir earnings today after the bell. I can pull up Earnings Hub. Let me pull up Earnings Hub so we can see. We've got big earnings. You got Palantir and you got HIMS. And like Steph just told me on YouTube Live, happy HIMS Day, everybody. I can't imagine that this one does well. Again, I will point you towards the conference call that Eli Lilly had. They said demand is stronger than ever. And they said, we've got plenty of supply. Demand, but we're having trouble keeping up with demand. How do you have trouble keeping up with demand when supply is completely... That's double talk. That is, hey, we're not going to allow these compounded pharmacies to actually, make money, to actually use the FDA rule that when supply is low, they can do compounded, because, rather than paying $400, $500, maybe $800 for the Eli Lilly stuff, you're paying $40 for the HIM stuff. It is what it is. I don't know exactly if it's been touted as great, but you've got this one after the bell. Now, the earnings, they're expected 4 cents per share. They reported 6 cents per share last time. They were expected to do 4 cents. 379 is the expected revenue. Last time they did 315 million. I would expect that. The key point on this one is going to be the guidance forward. Now, what else you have? You have Palantir. Palantir, 9 cents a share is what they reported last time. That's what they're expected now. Palantir stock, this is in the core portfolio. And Palantir stock has been crazy. I say that the valuation doesn't make sense. The algorithm just got you out with 22% gain. Am I getting back into this one? No, I just can't. I can't wrap my head around the valuation. And this is exactly like Tesla. I couldn't wrap my head around the valuation. And so I got out of Tesla super, super early. Now, the algorithm only makes you half of what buying and holding makes you. It makes you 151%. If you bought and held this one for 2 years, you're up 384%. I would argue that 37 is going to be the first level of support. Then if you get back below there, I would be buying between 32 and 37. For me, that would be pretty good. You'd have to have really bad earnings to come back down here to this gap between 30 and 32. But realize that gap is just September. That's just September. So this one on a weekly, it has run up a lot. There is nothing but extension here. Nothing. You just have your 200 day, by the way, is at 17. Your 50 day is right there at 25. So if you pull back to this 50 day, time to buy. This is one of the ones that I would say the valuation, don't worry about it. If it pulls back like that, just go and get it. Karp is just a phenomenal CEO. The software, phenomenal what they're doing. I think it's great. Now, Tuesday, not only do we have the election, we have the shit show of SMCI. I am completely out of SMCI. Full disclosure, I sold on Friday. I sold everything. Okay, I made a profit, still made a profit. Should have sold much, much earlier. Would have made more profit much, much earlier. But I'm completely out of it. I don't want to be in this when earnings comes. Because, have you ever heard of a company called Enron where they falsified documents? Where did Enron go? It went to freaking zero. You were worthless when you had Enron. That's where I think SMCI is going to post probably good revenue numbers. They're not going to be audited. Probably good earnings per share. They can't do any guidance because it's not audited. So I can't imagine that they do anything, because in order to do that, they would have to release their 10K. So I just don't want you to find out that this is at $20. Now, if it all of a sudden goes to 40, hey, shame on me. But for me, the risk reward is not there. Also, tomorrow, you've got China's fiscal announcement. Wednesday, you have PMI data and the Fed meeting. There's no announcement on Wednesday, but you have PMI data and you have the Fed meeting. Okay. Thursday, you have the jobless claims in the morning. Then you have the Fed interest rate decision. I think it comes out at 2 o'clock. Okay. Then you have big earnings. Okay. On Wednesday, you have Qualcomm. We can do, you can look at Coupang, you can look at all of these other ones on Tuesday, but then you have you have Celsius before opening, you have Toyota, CVS Health, you've got Qualcomm on Wednesday, and you have ARM, and you have Melly, and you have AppLovin, and you have HubSpot. Those are huge. I mean, those are potentially big movers. Okay, you've got on Thursday, you've got Square. You've got DraftKings, you got Rivian, you got Airbnb, you have Affirm, which, by the way, just announced their move into international markets. Affirm could be a huge one. You have Arista Networks. This is a great one. You have Pinterest, which I've traded before, which is at 32 and could pump to 40 with some good things like Snap, like Snap did. That one's an interesting one. You have Toast, which is in the watch list. You have GCT, which we all just hopefully got out of, but it's trading around 22. Could this one pump up with some crazy stuff? Now, Friday, you have consumer sentiment. So you got a lot of stuff coming out. Biggest movers today, NVIDIA, of course, with the Dow. You've got Viking Therapeutics. This is a big one because this one, I think it's got Viking shares jump after positive early data on oral obesity pill. Lilly and Novo drop. Okay, we can look at Lilly because that's the one. Viking Therapeutics is becoming one that I think you should probably get into. Lilly, I'm loading up on this one. As this one shows some strength, I'm going to load up on this. That conference call, we've gone back and we've covered this gap down to 775. I think you may come back and retest midway below $800. In my mind, I think you buy this one at $800. And the reason is very simple. I think that conference call, I think what they said was, hey, we don't have the supply to meet the demand. The demand is huge, but we have plenty of supply. That's keeping Hims and the compound pharmacies at bay. That's fighting off that those kind of people. I think it's just double talk. That's where I think it's going. So you've got another big mover of the day. You've got Trump Media, down over 7%. This is one that you could trade, and it's been crazy to trade. I don't want you on a long time frame because, look, you were in at 13 on the 4-hour algorithm. Okay, it does beat buy and hold. It's 118% versus 79%, but you only win 35% of the time. Your average win is 26%. Your max drawdown, though, is 70%. And that's where you get screwed on longer time frames. So I would rather see you pull up something like the 65-minute algorithm and trade this one on there. Now, this one, this 65-minute, look how close it got you out. Nice 22% gain. Just guess the results. If you're looking at the bottom of your screen now, Okay, on DJT, over 8 months, you make 588% in this stock. Okay, within 69 positions. It's a lot of trading. You can see there's tons of trades in here. You can launch this as a bot. What do you make if you bought and held this for 8 months? You lose 23 freaking percent. Okay, you don't have confirmation right now. You have nothing. The MACD is resetting on this 65-minute, but I would argue find a short time frame. You could use the AI trading model to try and look at that one. But that's a big mover of the day. There's your big movers. Now, let's talk about alpha picks. Because Seeking Alpha, they don't have their Black Friday sale yet. Just hint. Yet. But if you wanted to get Seeking Alpha Premium and Alpha Picks, it's on sale. I save you $159. I will argue that I don't think that the Black Friday sale, they haven't released anything to me. They have said that they're having a Black Friday sale. So if you want, just wait. Just wait for it. The Trendspider one, do not wait. But this Seeking Alpha one, if you want it right now, the Alpha Picks portfolio, we just got a new pick on Friday. I bought it. Now, I made a big mistake. I forgot that I only invested like $50,000 worth. So when you go into an Alpha Picks, when they release the pick on the 1st and the 15th, you're supposed to buy 1% of the portfolio. So you're supposed to buy 1% of the actual stock. So I have $50,000 in there. I was supposed to buy 500. I bought 5,000. Just FYI. It's a cruise line. I'm not a cruise guy. I will be slowly weighing that down. But I bought 5,000. Just FYI. The paywall on Amazon, we talked about it. Well, I think I talked about it right before. Amazon founder Jeff Bezos just filed to sell $3 billion worth at 200 again. So Amazon, even though it's at 196, and we saw this one pump after its earnings, we saw it pump up to 198. It didn't get over 200. Got to $200.50 in the morning on Friday morning. Okay, so it hit that, rejected off. Where's it going? Where is it going? Well, my guess is just back to this trend line. Those earnings were good. I think you're going to regain this trend line. So you're going to see it use resistance, but I think 225, 250 is where you're going. But you will have to get through what we're calling the Jeff Bezos paywall. Because at $200, he is going to sell so much that it's going to be crazy. It's going to be nuts. So just expect that one. Expect that. So if you're buying at 197, I'd rather see you buy at 202 once he says, hey, we're done selling. 202, 203. I'd rather see you buy there than to buy at 196 and have it pull all the way back to 188 again. Remember, this 188, this is the old resistance. We need that to turn into new support. It didn't. Look at how it pulled back right through it. So I would argue that 185 to 180 is probably your resistance level right now. Your support level. I would argue that is probably, if you get this under 180, count yourself as lucky. Okay, but that paywall is there. Now, Microsoft, till death do us part. The first 50, 200, I talk about this all the time, the golden cross and the death cross. This is the death cross, the 50-day crossing under the 200. That yellow line is the 200. The blue is the 50. I use a red as my 200, just me. You can do whatever color you want. But this is a daily chart from Microsoft. Okay, that death cross, the first death cross, since March of 2022, the price fell 30% before. So let's see where we are. I know we're out as far as the 4-hour algorithm goes because the 4-hour algorithm actually reacts quicker than the daily. I would argue that if you're going to buy this, buy it between 400 and 430. And I think long term you'll be okay. But if we go up to this daily, yes, you have that death cross. And yes, you've broken that trend line. Where does that trend line come from? That is the weekly, where I put the trend line anchored at the January 2023, where it hit the 200-day. And you can see we started using that as support. We've broken that. So do you want to buy it? I would argue that down here, that, we could continue to go down. You see in 2022, when the MACD kind of got back to the oscillator, it continued down into the October lows. So I would argue this doesn't mean that you're safe. This doesn't put you in a safe position. This just puts you in a position that, yes, it's an opportunity. I think that Microsoft is perfectly fine. Long term, I think short term, you might see some downside. It took me 10 years to become a great trade on this. But it wasn't like the money was sitting there doing nothing. It was sitting there in Microsoft getting a small dividend. It was what it was. Now, if you want to invest in iPhone, these are the companies that make everything within an iPhone. You can see Broadcom does a chip. Texas Instruments does a chip. Cirrus Logic, Bosch, okay? Cirrus Logic, Renesas, Qualcomm, Broadcom, Skyworks, Qorvo, NXP, Qualcomm, Skyworks, Broadcom, Qualcomm, Qorvo, NXP, Texas Instruments, Cirrus Logic. Just go. I'll put this in a link in the newsletter so you can see it. Now, this was an interesting one off of CNBC. Top Wall Street analysts are confident about the long-term potential of these three stocks. I thought this was interesting. First is Fiserv. Next is Boot Barn, and next is Chipotle. I'll put this article in the newsletter. This goes over everything that you need. And I think it's from Tip Ranks, which I think D-Man likes. I think that's the one that he likes, Tip Ranks. But yeah, it's a good article. Shows you kind of those three. Like we talked about, Viking Therapeutics, positive results for their GLP-1. It's up now 20% in pre-market. Let's see, VKTX. Is the symbol. You'll see that this stock just pumps. This 73 to 14 is where the algorithm got you in. Right now it's at 75.80. It's come back down. It's only at 4% up. It pumped in pre-market. If you look at this in pre-market, we can go and look at a 5-minute pre-market. Look, it pumped all the way up to 91. We've come back down. I mean, that's just the way some of this stuff runs. It's come back down. So in the 4-hour algorithm, it got you in at 73.14. I would have said, hey, at 90, sell it. Look at where it got to here at 82. You can always buy it back cheaper. This one's just one of those ones that pumps up. I like the stock. I like, another one, nuclear. Talon Energy shares plunge as FERC rejects nuclear power deal with Amazon. So essentially, the commission said, hey, this is going to raise consumer prices because you're going to take away all of the nuclear stuff. So Talon can't sell it to Amazon for their data centers. And so Talon Energy, TLN, the way I found TLN was VST, which is the largest gainer in the S&P year to date. This was one in Seeking Alpha that said, hey, you can get this. This is one that's kind of like it. Now, algorithm got you in at 179. You're in at 157. It will probably get you out on this candle. I would put this on your watch list. I do have this on my watch list. Backtesting started only 114 days ago because that's when it went public. Now, Talon Energy, if we go and look at this one, we can see it is number 1 out of 6 in the utility sector. Okay, independent power producers and energy. Look at the year to date. Year to date, it's up 171%. It's only got an $8 billion market cap. That is pretty small in this world. The quant has it as a strong buy. Again, this is all part of Seeking Alpha Premium. This is what you get with Seeking Alpha Premium. You can take a look at these stocks. Now you go down here, the bulls say TLN's generation assets, including nuclear, are geared to higher electricity demand and prices. This is nuclear. I'd say buy the dip. Honestly, I'd say buy the dip. Now, Wall Street, there's 10 analysts that cover this. Where's their price target? $217. I think they're going to find a way to get this nuclear power over to Amazon's data center. So that's my tip for the day. If you want any of the other nuclear stuff, it's all in here. It's in this article. If we just go back here, CEG, public service, VST is down 3%. NVDA is up 1%. So, yeah, you can take a look at TLN. And if you want others, you can just go to peers over here. And this has all of the other ones. TAC is another one. Alta, Vistra, is the one. And you can see Vistra, if you go look at market cap, they're 41 billion. Okay, that's why TLN is so small. It's 8 billion. But you can look at, TAC is only 3 billion, and that's nuclear as well. So I like that one. I like that a lot to buy it. Let's see. Buffett, Berkshire Hathaway released their filing on Saturday. They sold a bunch of Apple. They sold a bunch of Bank of America. They sold a bunch. They are flush with cash. He is sitting on the largest cash pile he has had. And it's not percentage wise, but the actual dollar amount of cash is mind-boggling. Mind-boggling. Let's see. Inflated a record $325 billion as of September 30th to $277 billion only a quarter ago. So it's $325 billion in cash. This article goes over it. I don't know what he's thinking. He got out of Apple. Does he think that Apple's extended here? Probably does. You can look at Berkshire. BRK.B is what you want to buy. So let's go over some social requests. And I will tell you, Eli from the Substack newsletter, he has done, if you go to the newsletter here, Eli put in this whole chat, what he's done for everybody. and thank you, Eli, for this. It looks really good. Is a while back I had said, hey, you should be using AI to look at stocks and to analyze this stuff. So he's put in prompts, one for market analysis, one for portfolio. All you have to do is copy and paste this into an AI, into ChatGPT, into Google Gemini, into Meta. Meta's open source, Llama. You can just go into freaking WhatsApp and paste this stuff into Meta AI. And you can say, okay, here's the one market analysis. Here's the portfolio diversification. Here's risk management. Here's technical analysis. Here's economic indicators, value investing. All of this Eli has done for you. So you can just go and buy it, go and just copy and paste. Great. Eli, thank you so much. I'm going to actually put those in an Apple note for me and look at it. Now, Eli wanted me to look at a couple of them. First one is PSIX. Okay, this one is the power one, Power Solutions, that we got out of Seeking Alpha. So if you go to Seeking Alpha and you just go to the top stocks, PSIX is up top again. Okay, it was out of there. It's up top again. It's a small company. The market cap is $490 million. Okay, it's not a huge company. It's a strong buy from the quant. The quant has had it as a strong buy all the way since 12. It's trading at 21. Okay, Wall Street says it's a strong buy. Their price target is $22. That's 3% upside. Now, where has it traded? It traded all the way up to $25 over the Wall Street price target. And that may sound crazy, but there's one freaking analyst that covered this on Wall Street. So his price target is $22. Now, if we go and look at the valuation, their PE's low. Their PEG ratio is perfectly fine. Their growth, fantastic, because they're growing their levered free cash flow, minus 1.6, but the operating free cash flow. Again, it's a small company, so you're just looking at where the cash is going and that the growth is coming. Profitability, fantastic. Look at the return on common equity, 1,931. That is crazy. Crazy good. Momentum, again, strongest force in the market. I would argue that this is higher in the Seeking Alpha quant than other factors. I don't know exactly what goes into the quant, but this is fantastic. 1 year, you're up 648%. So is it a good one? It's a heavy industrial. There's 12 companies here. I would argue that you could probably look at this by market cap and just sort it by market cap. Investor Wind Industries is the number one, but their quant rating is 1.57. So if we just sort this by quant, PSIX is the number one. As far as the stock goes, I have put in here 3 lines. And those 3 lines are based on a weekly chart. Because this one, it does have some history. It goes all the way back to 2014, 2015. It IPO'd, looks like at about 30. And it went all the way up to about 90, it looks like. And then it just started slowing down. And what you saw here was a bunch of higher lows and lower highs. And that's not good for a stock. But what you've seen since April is the move higher. And you've seen the Bollinger Bands expand. This is quite extended on a weekly chart. But I would argue that the steps on the way down, so that 20, I would argue that the step here at 12, and I would argue that the step here at 8, they were just steps to look at resistance, because you had 1 week where it hit 8 and pulled back. Then you had another week where it hit 12 and pulled back. Then you haven't had a week where it hit 20 and pulled back, but it hit 25 and it's pulled back. Okay, so I would argue that 20 is probably somewhat support, and I know it's crazy, but have your stop losses tight on this one. This could easily, again, it's not a huge company. It's run up quite a bit, so I wouldn't necessarily trust it. But if you wanted to look at another step above, then I would say the next step above is probably 25 right here. And that's where it rejected off of. See how this part goes back up and then comes right back down? I would argue that that's the next resistance, and that was used as resistance. The next resistance after that, I would argue it's between 58 and 68. So you've got a lot of time. Now, if we look and we pull this back to where it was trading at this time, there is no volume up here to support this. All of the volume is down below. So you're going to need to fill out this volume between 14 and 15 probably, because it hasn't spent much time there at all. But I think you're using between 16 and 20 as your support. So in my mind, I think that's the way you look at that one. Now let's look at IGIC. Essentially, Eli used one of my scanners in Seeking Alpha that I shared with the paid subs. So IGIC, International General Insurance Holdings. This one, algorithm has you in at 21. Algorithm makes you 45%. Buying and holding makes you 184%. We'll first look at a weekly. Okay, you got the 200-day, but you've just moved up. And if this is insurance has been on fire, absolutely on fire. So you got a positive 200-day, you have a positive 50-day. There's nothing here. This looks like it came out of a SPAC. So I would be a little bit careful of this one. IGIC, let's go look at IGIC. International General Insurance Holdings. It's a strong buy on the quant. It has a $960 million market cap. It's not my thing. When you go and look at Wall Street, there's one analyst that covers it. He believes it's $22 price. We can look at the summary. Where's this? It's traded up to 23. I don't know that I necessarily love this one, just because you came out of a SPAC. B, you don't have the downside. You're trading at all-time highs. Their earnings are coming up. IGIC, let's see if we go to Earnings Hub. Let's IGIC. Let's see if we can pull that one up to see the expectations on this. IGIC. But the lower market cap, I think it's just, so 56 cents. They reported last time 74 cents. I mean, honestly, it's not one that I'm taking a chance on. It's an insurance company. Insurance company has got to do well. Engages specialty insurance and reinsurance solutions worldwide. The company operates through 3 segments: specialty long tail, specialty short tail, and reinsurance. I just don't know. I mean, it's property and casualty. My guess is that it's probably not a bad one, but that market cap scares me and I wouldn't go into it. TIGO is the next one he wants me to go over. TIGO. And by the way, just so you're wondering, Eli is a paid member. So paid members, you guys get unlimited, whatever you guys want, whatever you ask me for. You guys are the supporters of the podcast. That's why I'm going over all of this for Eli. Millicom International Cellular. Ooh, this sounds ugly. TIGO. Algorithm has you out. It makes you 70% versus 161%, 29 positions over 24 months. It wins 45% of the time. You do have earnings coming up. Again, I think this one, when you look at a weekly, you're just getting your golden cross on the weekly. This one looks like it could pop to 20. I mean, that leg right there, this 28, which it's using as resistance, I get. If they have good earnings, you might see it pump up here to 47. Put $100 into it. Have a stop loss here at 25. I'd have a stop loss in there at 25. Their earnings are coming out, it looks like today after the bell. TIGO, let's see. Let's see if they're in here. TIGO. Let me just make sure they didn't announce this morning. TIGO. Yeah, they announced and they missed. But earnings in 3 days. I'm sorry, 3 days. 3 days they announced earnings. So 3 days they announced earnings, 59 cents expected. Just look, God. Let's see. Yeah. 1 week, they're down 3.4. I mean, short term, it doesn't look super strong short term. Just because you might pull back to this 200 day at 25. But I mean, this one might be, I don't think, let's see. This is TIGO. 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 Looks like it's a buy. It's not a strong buy. $4 billion. Cellular. It's a foreign cellular company. Is it sold over the counter? No, it's sold on the NASDAQ. So it's okay. Provides cable and mobile services in Latin America. It offers mobile services, including mobile data. Blah, blah, blah. This one might not be bad. Of the three, PSIX I know has it's pumped. This one year to date is up. Looks like 48%. So it hasn't pumped a ton. The valuation looks decent. I mean, they're not making money, but they're expected to. If they come out and say that they're positive on that one, that might be really good. Growth, 5%. Look at the earnings per share diluted growth, 2,450, 68%. That's crazy. Profitability, really good profit margin, 74%. That's fantastic. Momentum, you can't beat it. I mean, that's an A, 1 year up there. Revisions, 3 up, 2 down. So when you go and look at the Wall Street's earnings on this one, or Wall Street's estimates, their estimate is 32, and it's 22% upside. I would say this one's worth of the three, I would probably put that one in, Eli, to be honest with you. From Spotify, Caprica, thanks for looking into Shark Ninja. I did bring that one up Friday. Was overbought, now worth a solid look. Curious about your thoughts on ASML. ASML is the Dutch company that shocked the world. They make equipment for semiconductors, and they released their earnings early. It was horrible. And Caprica says, curious about your thoughts. It's hovering around the 200 day on the weekly after the last sell-off, falling knife or printed to start the rebound. Or primed to start the rebound. So I'm not a huge fan of this one. And the only reason is I'm a fan of the actual chips like Broadcom, like Taiwan Semi, who actually buys these products. I don't think that this is like an unbelievable opportunity. And you can see you typically have pullbacks in this name. I mean, that's 2023 where it came down. It's just resetting itself. Do I think that this is an opportunity? Maybe. We'll take a look at the valuation. If you just look at the October 2022 lows and you go through this and you touch 3 lines, okay? 3 of the closest lines. You've broken that trend. So where's the actual loss and the stop of this? It's going to stop at some point. This is not a company that's going to wind up going to zero. But at 674, I would probably trust a little bit more some of the analysts on this one. The quant has it as a hold because the valuation sucks. The valuation it's too expensive. The growth, it's okay. Revenue growth, 15% going forward. When you look at the valuation, is the growth covering this? Look at the PEG. It's 1.79. The PEG of NVIDIA is super low. The PEG of Taiwan Semi, it's super low. So when you factor in growth, Taiwan Semi is at 0.88. NVIDIA is at, 0.1. It's at 1.34. So when I look at, okay, I want to buy a stock, I'm looking at, okay, where's the best opportunity for me to gain money? And I think that's in NVIDIA and Taiwan Semi. ASML, I think it's just expensive. Honestly, I just think it's expensive because when you look at the momentum, where are the buyers showing up? They're not showing up yet. Even though it's oversold, they're not showing up yet. So in my mind, Caprica, at some point, it makes sense to get into this one. And if you know more about the semiconductor industry than I do, at some point, it makes sense. But for me, I still think that NVIDIA, I still think that Taiwan Semi, I still think that, some of those other ones like Broadcom just make a little more sense. From Spotify, Shep, my only election concerns are the results dragging it out because we are looking at a virtual tie. This could really be a gnarly situation. Time in the market wins. So if you're in, buckle up, blah, blah, blah. Same thing. Yeah, Shep is 100% right. From the Facebook group, Gary, Scott says, can you go over ACLS? Earnings are this week. The stock was once a volatile stock. ACLS. And what I'd like to do is just show you guys. This one's a technology company, and you can see how it's pretty volatile. I mean, here's the thing. The algorithm makes you 65% versus 45% buy and hold over the last 24.5 months, 28 positions. You win 43% of the time. So even though this one's a downward spiral, your average win is 10%. Your average loss is 3%. Your max drawdown, though, is 28%. So over that time, the max that you've lost is 28%. So can you trust it? In my mind, at 43%, I'd rather see you get into a stock that's in an upward trend rather than a downward trend. And this one is a downward trend. Now, just like ASML, it's coming up on that 200-day. Your MACD, super low. But what I want to do is take a look at this one for some people that may not pay for Seeking Alpha, because I used these free tools for a very long time before I started paying for Seeking Alpha. And they get you by and they get you the information that you need. So let's look at ACLS. This is a semiconductor equipment manufacturer. Okay. They have a income of $239 million. Their cash on hand, $16.66 per share. And their shares outstanding, 32 million. So they're not going to dilute you. Their PE, not horrible, at 11. Their average price target, 145. They're trading at 86. So we can go and take a look at these analysts. The last analyst that touched this, it was in May 3rd. Craig Hallam said the price target's 130. Everybody else, you can kind of throw it out because, the 130, I may even throw that one out, to be honest with you, just because it's since May. And since May, it has come down that much. He chased it up here. I mean, he chased it at 104. He said the price target's 130, but you're just going down. And so that high point there where you're looking at that's a trend line. So in my mind, it probably doesn't make sense. Is anybody buying this? No. They're selling. I mean, nobody's bought this since it's come down. March of 2024, dude was buying at $112, but he was buying $49,000 worth. That's like you going out and buying lunch for a president and CEO. So I don't like this one. We can go and look at it in the quant. But that's how you would take a look at it if you don't have Seeking Alpha. And trust me, I used that for years. ALCS has a high performance badly. The company has operating cash flow year over year of minus 32%. So there's better places for your money. That's what I would tell you, Scott. Now let's talk about scans. These are the stocks in Trendspider that show a potential of going up. One that has gone up since I bought it as part of Alpha Picks is Powell. This one has a new buy at $279. Again, this is just on technicals, so you can take a look at it. If you were to buy POWL, 24 and a half months ago, you can see you made 1,036%. This is a highly volatile stock. Look at this. Alpha Picks added it here, in May 15th of 2023. They are up an enormous amount, 359%. I bought it. I'm up like 10% on this one. This one in pre-market down 1.4%. The MACD extended. The RSI extended on the 4-hour. We can look at this one. The MACD reset down to the oscillator. The RSI extended at 65, but not completely overbought. This trend line is the weekly trend line. That is from the weekly. Look at how it's respecting that. I would argue if you're going to look at this one, maybe look at this one when it gets closer to this trend line, because you can't argue that that is straight up and you're just extended too much. That's how you look at these. Okay. When I put out my scans, you say, okay, where's my time frame? And if it's long term, just buy it. If not, you can trade it on a trend line. GLW, which is Corning. This one had you in at 41. Boy, you're at 48. You love that one because that was just September 12th. That's less than 2 months ago. And you're up that much. Okay, 20%, somewhere in that neighborhood. But this one looks like it's getting another leg up. The MACD is crossing up. It's not, it's not super high. While the price has gone up, the MACD's just been going sideways. The RSI just been going sideways. The RSI's at 58. This one has another leg up. One that I really like and is another alpha pick is Cardinal Health. And again, this is from the watch list. But this one has a buy-in here at 115. You may say, oh my God, it's just bouncing off of this all-time high right here, which is 115 right there. It just looks like it's resistance. Yep. Resistance. But the MACD is down there. The RSI is at 68. It shot up after their earnings. They now have the support of good earnings to move higher. It's at 117. So you can see this one. 95, that was a resistance that turned into support right there in July 2024. So I would argue every time you hit the 50-day on this one, it's a time to buy. So go and look at the, I've gone on for an hour here, but go and look at the newsletter. The newsletter is 100% free. It's right here. And this is 100% free. You don't have to pay for anything. You'll see all these scans. You'll see all my notes. You'll see everything. If you made it this far, there's no reason not to sign up. Again, it's completely free. And please, I will say this every day this week. If you have thought about Trendspider, go and get it. This is the time to actually spend the money. If you've got $5,000 in your account, do not spend $500 on software like this. That makes no sense. A 10% gain. This software isn't going to get you 10% of your money. You're going to need to find free tools. Go and get Thinkorswim. Go and learn technical trading. And then take the training wheels off and get Trendspider when your account is at $50,000. When your account's at $50,000, $500 is nothing to spend. And that's what I would point you towards, is the AI tool is going to be game changing. This AI trading model is going to be, so do not wait on Trendspider. They will continue to raise the price. And this advanced price, I have never seen one-on-one training for an entire year for $670. You could literally set up training every day. So if you have any questions, hit me up. You can go to the link tree. The link is down below. Remember, when you sign up, wait until you're a paying customer. If you take advantage of the free 7-day trial, just make sure that after the 7-day trial, you email me. My email is up here on the upper right-hand corner. But you do need to be a paying customer. It's kind of like Alpha Picks. I'm not going to give you all my secrets until you become a paying customer. I want to make sure that you're going to use it for more than a freaking week. So if you have any questions, hit me up. Okay, thanks.
Every morning I wake up to the sound of the trading bell. My heart starts